Good morning. Going to wait here for a minute to let people get in. Is today sort of the first summer Friday of the year? I don't know. I guess technically the Friday after Memorial Day might have been. Sort of feels like the first summer Friday of the year. We'll see if it's a sleepy Friday or not. Good morning. I'm just taking my beetroot and moringa and oregano oil. As we go gently into this weekend. Overnight, let me share this screen here real quick. Overnight, what do we have? 58 data points. So solid day. Some good CPI numbers here. Actually deflationary on the monthly here abroad. This kind of on the screws. Don't love that on the screws here. So a lot of on the screws CPI stuff overnight. Let's look at second page. More on the screws here, a little hot. A little better here, a little worse on the annual. This has been a common theme, right? Monthly better, annual worse. Bitcoin continuing to bounce. Let's take a look at the markets before we get into domestic here. Overnight, Asia up pretty strongly. Nikkei almost 3%. Europe as well. We'll talk about why. I think you can sort of figure out what the why is, indicating, pretty strong here. Volatility down, but not at lows. I mean, the recent lows on the VIX, somewhere in the 14, 15 range. Gold surging. And as we look at commodities, big surprise. Oil down. By the way, I could be wrong about this, but just sort of anecdotally, can't really remember when both Brent and crude were under 90 in the recent past. And, I have to tell you, to me, I think the president is sort of spot on about this. And it'll also tell you a lot about how we arrive at the price of things, right? But the fact that with the Strait still closed, and with the conflict still sort of, I'll just say we're still in the midst of the conflict. For us to be below 90 here, I do think is an accomplishment. I do think that one could project us getting a 7 handle on it, maybe in the 60s when this is all said and done, if it's all said and done. And then dollar stronger versus most currency. So, long story short is the news is about, this potential deal. Let me read. Actually, I'm going to just go up here. If you haven't read the post by the president yesterday, and by the way, as of 4 minutes ago, by the way, Trump claims that the peace deal has been approved. Tehran says not so. So we continue with that. And an hour ago, there was news that Trump has proclaimed that the war has ended. That's sort of all over the place. 5 hours ago, same thing. And that's after some escalation, the night before. I'll put the rest of these pills in my pocket. I'll have them afterward. Yeah. At the end of the day, there's this sense that the end is near. How are we trading it here in the bond market? Ironically, Not as well as you would think. I mean, we're after a nice rally yesterday afternoon. We're not continuing that, and I don't necessarily love that. We are. Give me a 2-day chart. We are off yesterday afternoon's highs. Now I'm wondering if part of that might be a Ginny roll, but on Ginnies fives are off the highs. We might just be wide. Seth, you might have something to say about that if you're on here. I feel like maybe Ginnies are a little bit wide right now, but 447 on 10s and above the 445, even touched slightly below for a minute yesterday, maybe 444 and change. And so I would have liked to have seen a continuation rally, especially in the absence of any data today, or at least at the open. We've got, 10 o'clock sentiment. And, I don't know that that's a huge market mover. I think perhaps an indication of bonds playing a little bit of protect here this morning. It could be that summer effect that I talk about. We're probably in some light liquidity. I'm looking at my screen and I don't see a heck of a lot flashing. In 8:30, there's usually activity, even in the absence of data. Just generally across the board, and certainly as we prepare for this roll, but certainly across the board, we're off of yesterday afternoon's best levels. Generally speaking, it's been a good week for rates. We started the week, call it par 10 on 5.5s, and we'll see where we close it. But we got as high as par 22 yesterday. 30-35 basis point improvement in price in the belly. This has been, I think for us, and we talked about it yesterday. And so if you listened yesterday morning and I said, hey, I'd be a bit more float bias here and that I think we'd end the day green. I don't know, Jenna, tight spreads across the board. Okay. Are we Class C rolls on Monday, right, Seth? And so are we off the screen? Is today 48 or what's exactly the timing of this roll? No, it can't be. Today's the 12th. So why are we, so you're saying that we're not, width is not causing us being off yet the 440 best levels of the day. Maybe we're just sort of are we really down 6 on 5s this morning? By the way, you've got to get me either a Bloomberg you got to get me a Bloomberg or a TradeWeb. Just for this, if nothing else, I want to have it on the screen when I'm doing this. As I said, I use MBS Live just for, if I'm away from the desk or just a quick look, and it's a great resource, but it lags and it doesn't show you bid ask. It also doesn't show you a 3-month screen. And so what we have been seeing, I will say this, and sometimes I don't know if you guys on the rate sheet level or my originators here, if you see some distortion in rate sheets from time to time, these rolls aren't trading as orderly as maybe we are historically used to. And every once in a while, we've seen some coupons get jammed up. I forget if it was 6 or 6.5s like 3, 4, 5 months ago. But we were looking at like a 20-tick drop, which is, sort of outrageous. Okay, so that's, 4s are down 5. Okay, so 5s are only down a tick or two from best levels yesterday. So my guess is that you're going to see on rate sheets today, unless there were reprices, better levels than were printed yesterday. And so if you floated, you should be rewarded. If you floated yesterday and you got any reprices and you locked, you were rewarded. Now that we've seen a little bit of a bounce and the market is digesting a potential, conflict, I think where I'm a little bit weary here is if we are more strongly signaling the end of this conflict than we ever have, as far as I'm concerned, to this point. Now, I could certainly understand the market's apprehension because this isn't the first time we've either A, said we're done, or B, we've had a different opinion than Iran on where things stand. But that being said, I would think that on the rumor, we would have followed up on yesterday's rally. Maybe we're waiting until 10 o'clock on what is likely a slow day. I don't know why. I don't know why we'd wait until this data point at 10. The 6 and 6.5 stuff for me. What's July? Where do July 6s sit on the bid side right now, Seth? If what I'm seeing translates, a 6.25 note rate and above, for me, if it's a June closing today, is a full-on lock. I think once you get into the 5.25 to 6 1/8, I am probably 70% lock, something like that. 5.75 to 6 1/8, and maybe I'm more 50-50. 5.25 to 5 5/8. I think the 50-50 is that narrative that I've been talking about. If you're offside, well, you're still offside. If it's a recent app, I think you have a little bit of a good story to tell. You probably picked up 25, 50 basis points, maybe even 3/4 if you time it absolutely right, possibly a quarter in rate. If you just simply look at a 1-month chart, okay, our worst level was 100 basis points behind where we are now. Our best level, only about 30 basis points better. So we are no longer mid-board on 5.5s. You are, call it 80% of the way to best level and well off worst levels. That to me, when you just simply talk about hedging, right? And you're hedging your bets, and even though you're doing it as an originator on the loan level basis, if the first question you ask is, do we have enough ammunition and or momentum to kind of break this potential resistance? And I would say for sure, par 25, 101-ish, in that vicinity is resistance for 5.5s. I mean, for sure, 101 the buck is absolutely a pretty hard resistance point. You in the 3-month chart, you have to go pre-conflict to where we were consistently better. And so the question I would ask myself is, okay, if the conflict ends, we're going to comp to February in terms of no conflict. But is the data going to comp to February? And while this latest cycle of data has absolutely been more bond friendly, the entirety of the data since February 28th, I think is the date, has been more bond unfriendly. Therefore, it's hard for me to make a case today for us to be better than a 101 handle on a sustained basis on 5.5s. I just don't see how. Awesome. That is great to hear that, Aletta. Hopefully you locked that with us, by the way, but if not, no big deal. So Seth, 101.23, but please give us a look on your next one. 101.23 on 6s is a solid level. And I would imagine that that's really where most folks are originating here. And so when you look at a 6.5 chart, oh, nice. Thank you. That's awesome. When you look at a 6.5 chart, right, you're talking middle of April, 101.30-ish, and March 4th, 101.27, which is right where this is indicating. And so whether this is the exact strike or not's irrelevant. The importance is that I'm comping to how they display the rate. We're in line with March 4th on 6s, okay? So why the heck would you float that? I can't. Awesome. We really appreciate that. And what I would say is part of what we're trying to do here is, we want to be your go-to lender, not just because you're sending us loans, but because, our AEs or our AMs or folks, in different departments or at the executive level are accessible to you. Not every loan is going to go great. We're going to try our best on everything. But, it's kind of like that old adage, a friend in need is a friend indeed. You don't know that you need us until you do. And so we better be there if you need us. And that's what I would say. If you have any issues, any problems, there's always going to be people that you can talk to, and certainly your AE, your AM, or whether it be, Keith, or Everett or Mankel or Kenny and Chris and Jason. I mean, there's just so many people, Ralph. So please make sure that if we're not perfect, and that's always our endeavor, that you don't let it fester or whatever, and that we get this loan funded and funded quickly. But that's great feedback, and love to hear that. So, long story short is, if I'm looking at interest rates, really, really appreciate that. If I'm looking at interest rates 6.25 and above, and certainly 6.25 to 6 5/8, 6 3/4, I am pretty much full on lock today, especially if you've been chasing a loser, and especially in the context of June. Look, I don't mind you floating late July closings here, because historically, and I was unclear a month ago, okay, and I was a little reluctant a month ago. I'm feeling better and better about the early July, mid-July cycle, where we tend to see rates start to soften historically. That seasonality that I talk a lot about. I wasn't convinced we were going to get there. I'm feeling better about it based on the data that I'm seeing. And I'd be really surprised if we do see an end to this conflict. If the Fed doesn't lean, I'm not going to say they're going to do anything, right? But maybe just calm us down a little bit. I could see the Fed leaning on, now that the conflict is over. And we have already seen some softening in some of the inflation numbers on a core basis. We're going to just take a beat and see how this plays out. And so, as always, the market's going to try to front run that. And I don't necessarily believe that we should be at 450. I also don't necessarily see us at 410 on 10s. But if there was if we haven't seen anything these last 5 months, what we've seen is, even when the market wants to rally up, down, sideways, 6s and 6.5 coupons, so 6.25 to call it 7.25 note rate, have traded in a fairly tight range and really haven't broken out. And so, being that we're at the high end of this range, and even just for a brief moment in February, we broke 102 handle on 6.25. I mean, if you look at this 6-month chart, right? And this is where we are now, right? Yeah, this is where we are now. And this is the year, that's a lock to me. So if anybody has any questions, post them real quick, but that's a wrap for me today. I hope this helps. How would I play 10 o'clock? As I've said before, you guys get potentially a little bit of a free look at the 10 o'clock data for any lenders that might price early if you get a rate sheet before 10 o'clock. I'm not convinced. So when we print Michigan sentiment, right, they print inflation considerations and business conditions and consumer. I don't know that I would focus on the inflation print. I mean, it's a guess of a guess of a guess, but I think that I'm going to be interested to see that number. I think a miss will help us less than a beat will hurt us. Why do I say that? Well, I think that the overlying sentiment, no pun intended, is that consumers are feeling a bit down about gas prices and such, okay, about this persistent inflation. So if I told you that sentiment's not great, I don't know that that would surprise you, right? And again, because we're trading future, I think that the expectation amongst the bond market participants is that we're going to see a weakening sentiment or a weakening consumer. So if we have a slight miss or an on the screws number, I don't see this being a relief as much as, say, that CPI core miss was. Like, oh, okay, this wasn't a blockbuster number. It's still hot, but it wasn't a disaster. Here, I'm gonna kind of bid bonds here a little bit. Here, I see it as the opposite. I'm expecting the consumer to be a little bit weak, and if they're strong, I'm going to hate that more than I'm going to like weakness, unless there's this massive weakness. So that's how I would look at the number. That's how we're going to look at the number at 10 and kind of figure out, okay, do I need to get ahead of this and potentially lock a couple folks that I was hanging on? If this number misses and therefore alleviates all the data pressure for the remainder of the day, what you're left with is liquidity pressure and conflict pressure. And then I can't tell you if this conflict is over, and I can't tell you how you should perceive it. I do think we're headed in that direction. I still say my general float bias barometer is getting better. I'm more float than lock than I've been in weeks or a month, notwithstanding my front month considerations about locking down your June. And really no data on Monday, by the way. New York Fed on Monday, and that weekly ADP hasn't proven to be a tremendous market mover. So to me, Wednesday's the day. And we've got retail sales at 8:30 and Fed decision at 2. Boy, where it gets really interesting is if we sign this deal before Wednesday. And that's really what I think we're betting on, right? And so listen, buyer beware. Be careful what side you bet on. What I would say is there's more to gain than there is to lose, but there is still something to lose. Bulls and Bears make money, pigs get slaughtered. Thanks for the feedback. Thanks for the participation. Thanks for joining live. And as always, for the hundreds of you that watch on replay, get up a little bit early one of these mornings and join us. We'd love the feedback, but still appreciate you watching on replay. Take care, guys. Have a great weekend.